G'day and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Check the overnight session to begin with, and appears investors dismissed that disappointment over Nvidia's results, while US GDP data showed the economy grew faster than initial estimates. On Wall Street, the Dow reached a fresh record high close, while the S&P 500 was slightly lower, just below, in fact, its July record, and the NASDAQ fell slightly. Nvidia beat analyst estimates with third quarter revenue forecast at $32.5 billion, which had underwhelmed investors given the AI-driven rally in its shares, which has seen it become the world's second most valuable company. Other AI-related stocks, including Microsoft and Alphabet, were mixed. Broadcom and Advanced Micro Devices both slid. Apple rose after Citigroup named the iPhone maker its top AI pick, with Apple and Nvidia in talks to invest in OpenAI as part of a new funding round that could value the ChatGPT maker above $100 billion. CrowdStrike gained after the cybersecurity company beat quarterly revenue estimates. Dollar General slumped after slashing its annual sales and profit forecast, while apparel maker Lululemon fell after the bell, having cut its annual sales forecast. And shares of Polestar surged after narrowing its operating loss. Well, the US economy grew faster than initially thought in the second quarter amid strong consumer spending, while corporate profits rebounded. Gross domestic product increased at a 3% annualised rate last quarter, while consumer spending, which accounts for more than two-thirds of the economy, increased at an upward revised 2.9% rate. And the number of Americans filing new jobless claims slipped last week to a seasonally adjusted 231,000, which was slightly below estimates. Well, US Treasury yields rose following the economic data, with the view that the economy is solid enough for the Federal Reserve to be less aggressive in cutting interest rates this year, with those cuts expected to begin at its meeting next month. And the yield on the 10-year Treasury note rose to 3.86% and the 2-year climbed to 3.89%. The US dollar rose for a second straight session, and the Aussie is trading at 68 US cents. All right, let's get across those market moves with a focus on what we're seeing on Wall Street in particular. Peter Cardillo joining us from Spartan Capital. Peter, welcome back to ausbiz. Good to have you on the show again. It was all very much about Nvidia in the previous session. Of course, it reported after the bell. So what was your takeout as to have the market response to that result, which was seen to be fairly underwhelming?
Well, they beat earnings. They beat on everything except for their sales forecast, which was not in line with market expectations. And so, as a result of that, Nvidia fell yesterday. But if you look around, most of the other stocks in that space basically did very little. And in some cases were higher. So I think it's just when things get priced to perfection, this is what happens. And so we'll just have to wait and see. Let's not forget that the AI industry is here to stay.
It is indeed. Well, in fact, further to that point, I was just mentioning there earlier too, Citigroup rating Apple as the pick of those AI-related stocks, given its investment with Nvidia in OpenAI. How are you viewing Apple at the moment, Peter?
Well, I really don't, I don't talk about equities, and so I'd rather not answer that question. But let's put it this way. The techs have been somewhat laggards lately, and I suspect that's because that the AI is drawing all the attention.
Elsewhere, I know you don't talk stocks specifically, but we are seeing some sales and profit forecast downgrades there from some of those retailers. How would you describe what's going on in the retail space at the moment, and I guess that resilience of the US consumer?
Yeah, we saw that with the GDP numbers, the revision. Obviously, the consumer still has a lot of buying power and still remains the main force behind the economic expansion. So I kind of think, by and large, I mean, they're still out there spending. I guess you might say some have missed, some have not missed, but I don't think has much to do with the consumer, but rather maybe with cost cutting or just management.
So GDP growing 3% annualized rate last quarter. How would you describe where the economy is tracking right now, Peter? And also, of course, the Fed very much now focused on jobs. The number of
Yeah.
new jobless claims there did slip. Overall, what are you seeing there?
Yeah. Well, look, that's what happened last quarter. We don't know what's happening in this quarter. And certainly the job market is weakening. There's no question about that. And, that's a very good point that you brought up because last week, Powell went out of his way to stress the job market. He said, we want to weaken it, but we don't want it to fall off a cliff. And so I think the jury is still out there and we'll have an insight of what's happening in the job market next Friday when we get the August unemployment data. But if we look at what came out today with the jobless claims, right, it was a non-event. But if you look at the continuous claims, they shot up and they've been moving up. And so that's a sign that there are more people out there that are on the that are not on the payroll system and that are receiving benefits, and that's a sign of weakness. So I kind of think that the jury is still out there, and if you look at the bond yields, look at the spread between the 2-year and the 10-year. Well, about 6 months ago, it was over 50 basis points in favor of the 2-year. That's narrowed substantially. In fact, it looks like it's going to invert where the 10-year is likely to move higher as opposed to the 2-year return. And that simply means that the economy, that investors feel that recession is nowhere in sight for now. But again, that takes us back to what I was saying about the labor market. If we get a real weak labor number next week, let's say something under 100,000, that would still show growth, but certainly it would show that the labor market is slipping and slipping rather fastly. And that could mean, despite all this good news that we got from the GDP and other macro indicators earlier from last week, that could still mean that the Fed is likely to cut by 50 basis points in September as opposed to 25 basis points. And another factor, as you know, today we will be receiving more inflation news. In fact, the Fed's favorite inflation guide, which is the PCE price inflation. And if we see a drop in the core rate, let's say by 0.1%, that I think gives us even more ammunition to think that the Fed, with inflation moving in the right direction and the labor market weakening, might actually have to pull the trigger by 50 basis points.
And Peter, how are we seeing that reflected in the currency at the moment? Obviously, with the expectations the Fed is going to cut, we have seen the US dollar come off quite significantly. Where are you seeing that tracking?
Yeah, I was rather surprised. I guess the reason why we gained nicely today was because in back of the GDP numbers, but I still think, there's a chance that we haven't seen the full unwinding of the carry trade. And that is, to me, the dollar's number one public enemy at this time, which means even good news that would be supportive to the dollar could still lean heavily on the greenback. And earlier in the week, we were pretty close to that parity level, and we managed to bounce off of that. But I still think in the short term that there's a good chance we can hit parity and maybe even dip slightly under parity.
All right, so given that weakness you're seeing in the US dollar plus the prospect of those rate cuts are coming, how far can gold run, do you think?
Well, gold, I think it's had a good week. It was up nicely yesterday. It's having a little tough time getting above this 25.75 range, but it's hovering around its all-time high. And I just think it's of a matter of time before we get to the next leg of 26,000, and then after that, a new leg that upward leg that takes us close to 3,000 by year end. In fact, if tomorrow we get if today we get good inflation numbers, there's a good chance that gold might knock on that $2,600 level.
All right, we'll wait obviously for that key data. Just finally there, Peter, what's your view on oil at the moment? Obviously we've got those supply disruptions in Libya. Iraq is looking to lower output. Then we've got a broader geopolitical conflict, of course, what's going on in the Middle East there. How are you viewing oil at the moment?
Believe it or not, I think oil is in a bearish trend right now. That is from a technical perspective. It basically reversed on the Libyan news and on the Iraq news, but I kind of think we're going to have one more push downward, and I think there's a good possibility, unless there is a real flare up in the Middle East or perhaps between Russia and the Ukraine. Barring that, I think there's a good chance we fill the gap to the downside and reverse the near-term bullish bearish trend, and then I think it rallies back up to about 78 or 80.
Peter, great to get your view from Spartan Capital. Thanks so much for joining us.
Thank you for having me.
Quick check of where we're likely to get going. Looking for a positive start there. SPI futures up around 0.2%. Stay with us because the open is just a couple of minutes away.